Hey guys, and welcome to the Working Money Channel. Bitcoin on the move, guys. It breached $11,400 yesterday. Now Bitcoin trading at about $10,900. We saw a bit of a retracement here, and it's still pushing its way up, not making any lower lows, still making higher lows here. And guys, you know what this means? Bring it back to the daily here. Bitcoin has finally breached this level here of resistance, this target that we've been eyeing for a while now. It has finally breached it, touching it after a fourth time. And now you can see it's just hovering around here, around this level. The next level of resistance to break for Bitcoin is about 12,300. So let me actually delete that. I will grab this line here and move it up here. That is the next level of resistance that we need to break in order to continue seeing the trend move up. And guys, this is great for the entire crypto space. We're seeing XRP on the move as well, albeit not as much movement as Bitcoin. XRP right now trading at 22 cents. And guys, if we look at the entire crypto market here, Bitcoin trading at 10.9, Ethereum 3.16, and XRP 22 cents. Bitcoin's still the leader of the pack. Some altcoins doing all right. Bitcoin Cash and Bitcoin SV following in that trend with 6.29% and 6.14%. Other old school coins like Litecoin up 9.32%. So it's looking as though a lot of the proof of work coins seem to be moving higher with Bitcoin. I suppose traders are assuming that those are more similar. Bitcoin dominance at 62.9%. The entire market cap at $320.2 billion. So it is growing by leaps and bounds every single day. Is this rally going to continue? What is this going to mean for XRP? So if Bitcoin continues its rally, I could see realistically XRP reaching this 34.7 mark. So this mark up here, this is where we need to break in order for XRP to continue its bullish run. And guys, I think a lot of this is going to have to do with what Bitcoin ends up doing. Now, there are a few schools of thought here. We are seeing cryptos rally kind of in tandem-ish with Bitcoin, but then we're also seeing some altcoins lose some momentum, like we are seeing the other day, Chainlink and VeChain losing some momentum against Bitcoin, and still we're seeing negative numbers for VeChain and Chainlink respectively. And those aren't just the only ones. Stellar has lost some momentum. Tezos has lost some momentum. Cosmos has lost some momentum. Boy, Ampleforth down 26.9%. Also. So what's going on? You know, is there rhyme or reason in the space? Should you be getting into a different coin because you want to chase the rally? No. The fact of the matter remains, do not chase rallies. Your coin will rally. This is just the beginning, folks. Again, this is not financial advice, nor am I telling you what you should be doing. I'm just letting you know based on the insight that I have to wait. Okay, I have a feeling that once Bitcoin breaches this 13,900 level that we saw last year, this level up here, it won't be much longer before we see it break its all-time high of about $20,000. And then we're off to the races. The sky is the limit. So XRP needs to break 35 cents. That is the next stop for XRP. Sure, there's this little level of resistance here, but I'm not too interested in that. This is the biggie, 0.346, roughly 35 cents in order to see XRP rally further. So what do we have? Bitcoin's 5-star show may go on for a month. Some people suggesting we're going to see this rally through the rest of the summer, with Bitcoin breaking 10,000 for the third time this year and going on its maiden big money move since the halving. Prospects are high. Like all moves from 4 to 5 figures, this one was initially met with startling enthusiasm. However, given the market we're in now, how long can the market sustain above 10,000? Well, I personally think that this move above 10,000 is much stronger than the last time. This is the first time we broke that level, and it did actually rally up to 14. We had some time, a cool-off period for sellers to sell their Bitcoin, and now the rally moves up again a year later. So enthusiasm has been renewed. The present move above 10,000 is different from the previous two surges in Q1 2020, which were caused by global political tensions and the looming oil crisis. Even 2019's $10,000 moves, the first in June due to the Libra excitement and the second in October due to China playing fast and loose with Bitcoin and blockchain, stand in contrast to the July 2020 move. So again, there were reasons for those moves in the past, and a lot of it was based on some irrational news, emotion. But this seems more like a fundamental move above 10,000 in a lot of ways. They're suggesting here that it is no surprise that gold, the traditional safe haven asset, surged to 1900, its highest point ever. So also considering Bitcoin in that same realm with gold, GOLD, where's gold? So gold also at 1929 right now, seeing a big move up. Bitcoin also seeing that big move up. So alternative assets, a hedge against the stock market. Here's the S&P 500, and we're still seeing the recovery, but a lot of people realizing this isn't necessarily a true picture of how healthy the economy is. So, in what direction will the price move? Looking at the annualized rolling basis for both monthly and quarterly Bitcoin futures contracts, there is room for a short-term burst followed by a slowdown with Bitcoin's price in prime focus. Just going to move down here. And guys, I always link these articles in the description. But with Bitcoin's price in prime focus of not just the cryptocurrency market, but also the investing world, the next few months will be telling. However, as things stand, economic uncertainties, liquidity overflowing, and stock market struggling is a positive sign for the cryptocurrency. A lot of the traditional reasons why they think Bitcoin will continue to soar, and that will ultimately bring altcoins up with it. I also saw this from Michael at Val5Links on Twitter. Bakkt just reported the largest single-day volumes for a while. So fueled by Bitcoin's rise, Bakkt reports record high volumes for Bitcoin's futures market. Bakkt just reported the largest single-day volumes for its physically settled monthly Bitcoin futures contract. On Monday, Bitcoin futures market saw a new all-time daily high of 11,500 per BTC, an amount worth nearly 114 million based on the closing Bitcoin price as reported by CoinMarketCap. And you guys can see here the volume has just grown for Bakkt's futures market. Guys, again, I will link this article in the description for those of you guys interested in reading that. Another post here on Twitter from Matt at Matthew LINY. When the elite want to hide money, they will send it offshore to a location that does not KYC. And so this ties into what's going on nicely because we have Bitcoin, we have people making money. Bakkt futures for Bitcoin are at an all-time high. We're assuming that Bitcoin is going to continue to rally. And so what do the rich do when they make money? Well, they try to pay as little taxes as possible. So Matthew just pointing us to this list of mutual funds. This is from the Cayman Islands, Digital Asset Management. And here, Digital Asset Currency Fund, the Alphabet Digital Currency Fund, was registered back in March 2017. So just an interesting little tidbit there. Wanted to keep moving along though. U.S. crypto exchange Coinbase now has 35 million retail and institutional traders. Obviously, probably a milestone for them. The leading U.S. crypto exchange Coinbase says its user base of retail and institutional traders has grown to 35 million. So what does that tell you? There's about 350 million people in the United States, maybe a little over that. 1 in 10 Americans is signed up for Coinbase. Now, I'm sure Coinbase has users all over the world, but just to give you guys some perspective on this, in its Crypto H1 2020 report, the San Francisco-based firm says in the first half of 2020, it witnessed a significant uptick of institutional investors such as multi-strategy hedge funds, venture capitalists, leading university endowments, and large family offices that directly buy digital assets. Today, Coinbase operates the third largest regulated exchange in the world, a central pool of liquidity that combines the assets of our 35 millimeter retail users and institutional clients. The exchange says a growing number of these institutional clients are convinced that cryptocurrency, particularly Bitcoin, offers an alternative to the current financial system regulated by central banks. So an influx, guys, this is what Coinbase is seeing of institutional investors, multi-strategy hedge fund, venture capitalists, leading university endowments, and large family offices that directly buy digital assets. Money is flowing in. This number is just showing us the beginning. I have a feeling that as this rally continues, we will see this grow and grow and grow. And I think at an all-time high in 2017, we were at something like 850 billion or something like that. And that number is actually relatively small compared to other major assets that people invest in around the world. So the cryptocurrency market growing by leaps and bounds, and Coinbase also telling us this in their report. I'm just going to read this quote down here. Investors are still in the early days of untangling the relationship between macroeconomic policy and crypto, but we are seeing a growing base of our institutional clients organizing around the thesis that Bitcoin specifically provides exposure to an alternative monetary policy system with supply mechanics that are diametrically opposed to those of central banks in 2020. Scarcity versus expansion, predictability versus uncertainty, decentralization versus centralization, software versus humans. So they are investing in cryptocurrencies like Bitcoin specifically to hedge their bets against the traditional system. Interesting to note there. Guys, this next one's about David Schwartz. He always has some interesting things to say. And did you know that XRP wasn't necessarily created for its intended use case in the beginning? Another one here from the Daily Hodl. XRP was created before use case for crypto asset was discovered, says Ripple Chief Technical Officer. So this, a podcast with David Schwartz, and comparing it to Bitcoin, suggesting that the alternate theory and our theory was that what made Bitcoin so amazing was not, in fact, the proof of work and not mining. What made Bitcoin so amazing was the fact that all the data was public and that all the transaction rules were public. So you don't have to ask anybody else if a transaction is valid or if somebody has a particular amount of Bitcoin or anything like that. So they looked at proof of work, realized that they could do better, and certainly they did. After XRP was built, Schwartz said the next step became to figure out how it could be used. So once you say, okay, we've built a new system that works, the next question to ask logically is, what is it good for? What are the advantages? Sometimes it might have no advantages. If you invented a new material, and then he gives an example of a new material that is heavy, expensive, makes water damage, and not very sturdy, well, then it's kind of useless, right? Schwartz said Ripple ultimately decided XRP would be used for international payments given its speed, low transaction costs, and the significant amount of issues plaguing the current banking system. Of course, we all know the story of this. XRP was created out of Bitcoin's particular shortcomings. They created a system and they knew proof of work wasn't the answer for a lot of reasons, I'm sure. The use case that we settled on was payments, particularly international payments, simply because that's where the pain was. So if you want to find a problem that people agree is a problem, and ideally the worst problem, the less perfect you have to be better than whatever you've got. International payments were so bad, particular things like remittances were just so bad that we could still be pretty bad and still be better. So obviously using XRP for that use case, and that's how it came to be. They created the cryptocurrency, obviously realizing Bitcoin had its shortcomings, created XRP, found a use case, and now focusing with Ripple, the company, on driving that into banks, financial institutions to really revolutionize cross-border payments. And many crypto enthusiasts in the space think that Ripple is going to be the company and XRP is going to be the token exclusively to work with banks and financial institutions. So this from Michael at Val5 Links posted this here. And this poll was from Sarah Austin, an Oracle manager and ex-Forbes employee. And she said bankers should join the fintech revolution if they want to stick around for the next 100 years. What blockchain technology is the most prepared to work with banks? And Ripple, an overwhelming 83.3%. Out of almost 4,600 votes, suggested Ripple. So why is that significant? For the next 100 years, you got to remember, when banks change technology, they're not changing it every 10 years, 25 years. They are going to keep this system for the foreseeable future. And I have a feeling Ripple will continue to build on the XRPL. But XRP, that cryptocurrency that can source liquidity, is going to be invaluable for banks and FIs as the years go on. So Blackwell Global, why banks prefer Ripple? In a similar development, a UK-based finance company, Blackwell Global, has revealed reasons why banks would prefer the Ripple blockchain over other blockchain technology in a recent blog post, pointing to the fact that Ripple, unlike other cryptocurrencies, offers services capable of revolutionizing the services rendered by traditional financial institutions. This makes it an outstanding blockchain. The first reason, as outlined in the post, is the distributed nature of the Ripple blockchain, which enables instantaneous, simpler, and faster cross-border remittances, as well as management of liquidity. Ripple also helps finance institutions have real-time data about transaction before execution, and it eliminates the role of the middleman, thus reducing transaction costs. The company further compared PayPal's transaction costs of 3% of the fund to Ripple's remittance service, where only 0.00001 XRP is charged for a transaction. You know how much that's worth, guys? If XRP is trading at about 22 cents today, times 0.00001 equals, what is that? 0.0000022 of a penny. That's how much it costs to make an XRP transaction. And you know, even if XRP was trading at $589, let's say the transaction cost would be 0.005 of a cent. I hope I got that math correct. I didn't plan this part out of the video. Anyway, if I got it incorrect, put it down in the comments. I for whatever reason, that seems very, very low. Nevertheless, guys, this is going to be a game changer. Banks know it, and it sounds like the populace knows it as well. Secondly, the Ripple blockchain technology aside, eliminating high cross-border transaction fees offers an amazing speed in processing payment. It takes Ripple 4 seconds to process a transaction that will take banks 3 to 5 days to perform. Comparing this with Ethereum, we know Ethereum takes up to 2 minutes, and Bitcoin takes a heck of a lot longer. The Ripple blockchain scalability and stability features were also mentioned as the basic reasons why the San Francisco-based blockchain is cherished by bankers. Ripple, unlike other blockchains, has maintained a stable track record over the years and had closed all its ledgers without any problem. Also, the ability of Ripple blockchain to handle 1,500 transactions per second makes it stand out in terms of scalability. The public knows, banks know, that the world will run on Ripple because banks aren't going away anytime soon. Got another one here, guys. This from Matt at Matthew Liny on Twitter. The digitization of everything, blockchain technologies and beyond. The CME Group, Central Bank of Brazil policy panel. We got to remember this happened back a few years ago, 2016. If you can't see what's happening, I don't know what else to tell you. This is a quote from XRP_owl. Some of you guys might know him as King Solomon on Twitter. And that is a great quote. If you can't see what's happening, I don't know what else to tell you. Just kind of leaving it up to you. The digitization of everything. So again, an oldie but a goodie. Taking a look at some of these companies that were part of this panel from way back when. Citibank, we know, has been testing Ripple, and actually a partner of Ripple. Accenture, we know, a partner of Ripple. We got the DTCC engagement here. JP Morgan, a lot of American banks here, the NASDAQ, Deloitte, Credit Suisse. So why will digitization change financial services? Potentially significant cost savings and new opportunities. And we know, guys, Ripple and XRP can fulfill that requirement. It is scalable, it is efficient, it is fast, it is cheap. All those things that big business needs in order for them to continue to make money. I thought this was interesting from Michael at Val5Links, NEO, XLM, and XMR. So apparently those were just 3 of the major cryptocurrencies. I mean, I've heard of all those cryptocurrencies. 3 of the 29 that have currently been delisted on Liquid Exchange. So this is a Japanese cryptocurrency exchange, Liquid. They've delisted 29 cryptocurrencies to comply with the crypto regulation in Singapore in an effort to become a licensed crypto exchange operator in the country. Singapore has been enhancing its crypto regulation in line with the standards set by the FATF. So guys, this might be something to keep an eye on depending on where you are. And I mean, I guess this could happen anywhere, not just in Japan. It could happen anywhere based on your country's cryptocurrency regulatory clarity. Due to heightened compliance requirements set by Singaporean regulations, some listed tokens cannot continue to trade on Liquid and will be taken off the markets, some of which are XMR, NEO, and XLM. Now, some of these other ticker symbols I do not recognize offhand, but XLM, they really are gunning hard to be regulatory compliant. If XLM gets delisted on the Liquid Exchange, where could it be delisted next? Not only that, guys, how is that going to help other cryptocurrencies with higher market caps gain more momentum in this bull run? You got to remember, once these coins get delisted, that liquidity's got to go somewhere. And, it's all part and parcel to this idea that there are going to be so many cryptocurrencies that just vanish after this next bull run. And I think, depending on what exchange you guys use, keep an eye on what your exchange may be delisting in this next run. Make sure you don't have any investment in that particular coin. This could be really great for cryptocurrencies like XRP, compliant currencies like Bitcoin, Ethereum, coins that haven't been deemed securities. So definitely something to keep an eye on in this next run. We've got this from XRP Crypto Wolf, a director at the IMF, said the private sector would bring value to supporting central bank digital currencies. So this is Tobias Adrian, and he is saying the private sector could actually help this initiative out. So he's a financial counselor and director at the IMF's Monetary and Capital Markets Department. He gave a keynote address last week at the Building CBDC, a Race to Reality conference sponsored by blockchain software firm R3. Adrian offered 2 models for the provision of a CBDC, varying in how they would pair the private sector with central banks. The first model looked at synthetic CBDCs, which are backed by the liabilities of a central bank but issued with the aid of a private entity such as a commercial bank. Adrian noted the private sector should be left to deal with consumer due diligence, wallet design, and currency distribution, while the central bank would be in charge of regulation and supervision. The second 2-tiered model puts central banks in charge of the issuance of a CBDC and transaction settlement, with technology likely to be occasionally updated. As such, the SCBDC model would spur private sector-led innovation at a more fundamental experimental level, he said, such innovation could be extremely valuable given the pace of technology change and given many central banks' limited experience in providing retail services, according to Adrian. So guys, I will link this article in the description if you want to read further. It's essentially point form notes here from CoinDesk with regards to the director of the International Monetary Fund and what he thinks should be the future for the private sector in relation to central banks and CBDC issuance. I feel like I'm moving along fast, but I think we need to do this because there's lots of information today. Keep moving along with Martin Volk. Now, I saw this the other day, and Martin, it's good to keep reiterating this because sometimes people just don't get it. So this is an XRP reminder, okay? When money is transferred from one account to another account within the same bank, there is no need to actually transfer any cash. And he puts in brackets settlement. It's just an update in their account system, in brackets payment. Okay, when money is transferred from one account to another at different banks, but still within the same country, both banks would have an open account with each other, resulting in an update in their accounting system payment. No money gets transferred. Settlement. The banks would work with a system called deferred net settlement, which occurs between participating banks at the end of a predefined settlement cycle. They might choose to settle the accounts and thus transfer the money at the end of the year. However, even that is not needed as they will continue to do business together. As long as they do so, no settlement is needed. But XRP is that bridge currency, and as the name suggests, bridges currencies and is used for international transfers. The great thing about using XRP is that it settles instantly. If all you do is transfer money within your own country, you won't need XRP, which makes sense. This has everything to do with the trust between banks of both parties. So again, international transfers, that is where we will see most XRP usage, at least at this beginning point. This is what Ripple is targeting. Of course, there are going to be many other use cases for XRP down the road, but this is kind of where you need to focus your thoughts on. EG6 asks, do you think banks would want to settle at the end of each year or clear books monthly or weekly or daily? And this is a good question because if this settles instantly, like we've talked about in the past, at your job, if payroll becomes much easier because money settles instantly, theoretically, you could get paid by the hour. Once you clock in, you've worked an hour of work, you'll get paid for that hour. And then as soon as you clock out, that's when you will stop getting paid. And you could theoretically get paid every day with blockchain technology because it makes the process simpler. There's less friction. So EG6 asks, monthly, weekly, or daily, changing the current process and including security to each transaction, even within their own institutions. Martin Volk says, in my opinion, everything will eventually move to instant settlement, but realistically, it will take time to get there. So great point that he makes here, and I wanted to bring this up because there was this post that I saw here from Shade-XRP, and this is an old article from 2018, but I thought it was important. It has to do with Citibank, and so here's the PDF. I will link it in the description. They talk about what is Ripple, how it is different, so really kind of giving you the ins and outs of Ripple and the XRPL, discussing how Ripple XRP improves upon Bitcoin by doing away with mining, which is energy intensive and inefficient. Ripple does this through a technique called consensus, which is a way for the entire network to agree on the current state of the blockchain. Okay, so it gives a description on that. Again, this document old, but very, very significant for where we see banks, American banks, going in the future. Now, Digicali asks, the following page 106 says Ripple tech unlikely to help tier 1 banks such as Citibank because of transaction size for large payments, but rather help tier 3 banks with smaller payments. And Galgatron actually responds, until ODL can help tier 1 banks, liquidity just keeps growing. And so part of this is building the liquidity, building it in those exotic corridors and, the tier 3 banks, those fintechs, those companies, those guys that create apps where you can flip money back and forth instantly. Those ones that run on Ripple, the Mercury FXs of the world, those guys will really benefit first. And what Galgatron is saying here is that ODL will keep building, which is good for the ecosystem until tier 1 banks finally latch on. They will be the final ones. And this was even stated by Brad Garlinghouse a couple of years ago. They are likely to be the last ones on board. And Digicali says, I'm trying to wrap my head around this. Volume in tier 3 builds price and volume builds corridors, demand suitable for tier 2 banks, Nostro and Vostro, volume, corridors, price, adoption, then tier 1 banks, and Galgatron says, perfect. So, just to reiterate, the volume is built with tier 3 banks, then the price and volume build in these corridors, demand is suitable for the tier 2 banks to replace their Nostro and Vostros, volume, corridors, price, adoption. Then once we have the ecosystem mature enough, that's when tier 1 banks will jump in because those are the ones that will need to target those high value payments. or are rather more likely to target those high value payments. So that is just one example of how we are going to see XRP price rise. Thought that was kind of interesting. Thanks so much, Shade, XRP, and Galgatron for adding in your 2 cents. Oh, and just to add on to this, March 2018 was when this document was published, the Bank of the Future document. And this just from a few days ago. Citi has hosted, this from Wrath of Kahneman, by the way, Citi has hosted an American Banker article that mentions Ripple briefly. It is a change in tone from some earlier documents. So this also from Citibank from just recently. And it mentions banks initially viewed Ripple as a competitor, though increasingly banks are partnering with Ripple. So this just points to the fact that Citibank, and I'm sure their colleagues, as they do all talk, their buddy at these conferences, realize that Ripple is actually going to help them do better business rather than thwart them by stealing their business. So I thought that was very poignant, and I'm glad I found that tweet from Wrath of Kahneman on Twitter with regards to Citibank, considering this article is a couple of years old now. So guys, we're getting excited by this Bitcoin bull run. Our alts will rally. Bitcoin is the first to move, as we've seen in the past. So something else I want to just remind you guys is this tweet I saw from the Cryptic Poet at One Cryptic Poet on Twitter. Here's how crypto bull runs work, guys, so just remember this. New wave of investors discover Bitcoin. Bitcoin price rises. Media hypes it. Once in, investors discover other crypto projects with potential like XRP, Ethereum, alts, etc. Investors will now trade and buy alts with their Bitcoin earnings. Bitcoin cools down. Alts pump. Rinse and repeat. So let's not forget, Bitcoin is pumping now. This is still in phase. Well, media hasn't hyped it yet. So Bitcoin price rises. We're still in phase 2 now. Once the media hypes it, we'll see some really big exponential growth, I think, with Bitcoin. We saw it back in, let me just bring it back to the bull run of 2017. We saw it back here when the media finally wanted to report on this. People went crazy, then Bitcoin cooled off, and it wasn't until the end of December, so in and around here, after we saw this dip, that altcoins really took off, and that's when we saw some major gains for altcoins. So remember, if you're invested in alts, we got to wait a little longer. We got to wait until Bitcoin hits that all-time high, surpasses that all-time high, and then that first pullback, I think that's when we're going to see money dump into alts, and at that point, that's when we need to be prepared to cash out. So, essentially, all you have to do is hold, people. Can you do that? I know I can, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.